Typically, everybody says, okay, we want to buy and hold something for a longer term, although not practiced as much. But this buy and hold strategy has a certain risk that because of technology changes, regulatory changes, like mega trends, which can impact a company negatively. Somebody needs to monitor that. So buy and hold is actually changing to buy and watch minus trade.
Hi, Nimesh. So, for the next few episodes, let's talk about some of the tools that people can use to improve their investment decisions. So, what, according to you, would be one of the most important, tools that investors can deploy?
I always emphasize that any investor needs to have a good investment process, which he or she needs to follow with discipline for investment success. And the most important part of a investment process is the buy and the sell discipline. In Indian mythology, in God's heavenly abode, Vaikunt, there are two guards standing there at the door, and Jay and Vijay. And they screen visitors who want to go and meet Lord Vishnu. They also landed up with a curse once because of misidentifying or making a mistake in identifying the visitors. Let's take that as a mental model for a buy and sell discipline. Imagine an investor's portfolio is a large room and with two doors in it. One is the entry door and one is the exit door. And there are two guards at each of these doors. And let's, for fun's sake, have the names as Nivesh and Vinivesh, which is the Hindi word of investment and disinvestment. So the buy and sell discipline, the Nivesh is standing at the entry door and Vinivesh is at the exit door. Both are following a function of choosing investments, but differently. Both are using certain tools, but with different applications. The job of the first one is to identify the best investment that comes into the room. And the other one identifies which are the companies that we need to disinvest from or securities we need to disinvest from to exit the room. So these two form the two pillars of our mental model of an investment process. Fortunately for us, Nivesh and Vinivesh are opposites, so investment and disinvestment, unlike Jay and Vijay, who are the meaning almost the same thing.
Let's talk about buy discipline first. So, what role does Nivesh play in portfolio design?
The important job that Nivesh has as a buy discipline is intelligent and disciplined selection of portfolio. Standing at the entry gate, there are two questions that Nivesh has to answer. What to buy and when to buy. So what to allow inside the room and when to allow that entry. What to allow is answered by the investment philosophy. So Nivesh goes out scouting for securities, stocks, mutual funds, which qualify based on the investment philosophy of the investor. So, and the Nivesh has to line up those as a VIP queue, that these are the preferred securities that we need to buy. These can be done also based on certain screening. So sometimes Nivesh does a top-down screening of companies that these are the beneficiaries or good securities to have. Sometimes it is bottom-up, company-specific, based on a certain qualitative or a quantitative screening. The first job is then to line up these securities which are preferred. The second job is to answer the second question, which is when to allow that entry, when to buy. Typically, you will find there are 2-3 reasons why good companies or good securities are mispriced or the valuation becomes attractive. And those are the points where you allow entry. So some of those are like most of the investors today are looking at very short term. Every company or industry goes through a certain cycle and it goes through a certain slowdown. Typically, short-term investors stay away or traders stay away from those companies. Valuations become attractive. And with a long-term view, Nivesh can take benefit of that and allow entry at that time. There are 2 other reasons, which are behavioral reasons, overreaction and underreaction. Sometimes the crowd overreacts to a small negative news that comes in about a company and the stock or the security prices fall quite sharply. Those become good opportunities to allow entry at that time. The second is when people underestimate something new or positive development that has come and are not able to see longer term on that. So that also becomes an opportunity to attract or buy some of these interesting securities at the valuation that we want. So with these two areas, Nivesh actually covers that job of allowing the right selection of companies to come in.
So it looks like Nivesh has its hands full, in doing everything that it needs to do. Does it encounter any problems while doing this?
As we discussed, when we are asking a question, when do you allow entry of a company into the portfolio? There are many behavioral aspects that come into it, valuation aspects that come into it. So a good buy discipline, Nivesh would combine fundamental analysis and behavioral analysis to do the job in the right way. The mistake sometimes Nivesh makes is that we accommodate companies that we would otherwise not buy, and we dilute our investment principles or discipline to accommodate certain securities. Now, why does that happen? One of the reasons is fear of missing out. Your peers are buying certain stocks or securities, and you want to participate because you feel you'll miss out on those. Otherwise, in a circumstances other than this, you would not have touched those securities. But because others are buying, you want to participate, and you're bringing that in. So that's one mistake that Nivesh makes. Another would be if the due diligence that is required on a company is not completed, or a security which is we are evaluating is not completed properly, impatience. Whenever suppose a CEO or a CFO of a company comes on TV and gives a very bullish guidance, people just rush to buy, right? They don't complete their full due diligence in understanding expectations already by the market. Sometimes it is Vinivesh which is driving Nivesh. People hate to sit on cash during bull markets. So just because they sold something or booked profit on something, they start looking at buying something in the market. Invariably, when you are a forced buyer, you end up making mistakes. So Nivesh makes these few mistakes either because of fear of missing out or impatience, or Vinivesh is driving. Sometimes we also make mistakes on valuations, what we are paying. See, no company is so good that you pay any price for it. So it is somehow linked to having that patience to wait for the price to come into your value zone before actually allowing entry. So these are some of the common things that we need to worry about when we are looking at buy discipline or Nivesh.
Now that we've seen a little bit of buy discipline, let's talk a little bit about sell discipline. So what role does Vinivesh have to play in portfolio design?
The sell discipline or Vinivesh has a very important role in portfolio. However, if you see all the literature, it doesn't give so much importance to the sell discipline. Most of the literature talks about the buy discipline. The sell discipline becomes important. Why? Typically, everybody says, okay, we want to buy and hold something for a longer term, although not practiced as much. But this buy and hold strategy has a certain risk that because of technology changes, regulatory changes, like mega trends, which can impact a company negatively. Somebody needs to monitor that. So buy and hold is actually changing to buy and watch minus trade. So you need to keep a watch on the companies that you're invested in, whether they are on the right side of all the trends or mega trends that you had thought of when you are investing in them. Typically, you would sell out of a investment for one of the 4-5 reasons. One, it becomes a very large part of your portfolio. So for risk management, you sell some part of it. Second, it has reached a certain target or a goal that you were looking for. It has reached there and you exit at that time. Third could be that valuations have become very high and they are untenable, so you exit from there. You may have a good replacement that is available, that I have a better investment and we can change that. Sometimes you have to hit a stop loss, that I made a mistake, there was a change in, say, the management or the business changed, and I hit a stop loss that it's fine, I get out of that. So these are some of the reasons. Typically, I would suggest that valuation should not be the only reason for selling out of a company. If there's a company which is growing its intrinsic value year on year over a longer term, temporarily, if the price moves ahead of its intrinsic value, I don't think that's the reason to sell out of a company. If it is combined with something else, then some other reason, then it should be used there. So Vinivesh has to do this work. Vinivesh has to monitor the existing set of companies that have come into the portfolio rather than what Nivesh does. Nivesh looks at the entire universe for opportunities. So Vinivesh has to mark companies where there are some changes happening, either in valuation or businesses, and I mean keep them highlighted that this is what can exit if a trigger comes in. So then the when to sell part comes in. That when valuations or something is combined with another trigger, that's when, like, Vinivesh sells. Also, an important job of Vinivesh or the sell discipline is to give feedback to the buy discipline. Nivesh obviously identified an investment because of certain positives that that investment had. Ultimately, profit is realized by Vinivesh. So Vinivesh actually feeds back that whether the process was right or should something be changed for that. So self-discipline, though less spoken about, is a very important part of a investment process.
Nimesh, what kind of problems would Vinivesh face while doing its job?
To put it in a very simple way, there are two mistakes that a self-discipline or Vinivesh can do. First, holding on to losers for too long, not exiting them. Second is exiting the winners too early, not holding the companies that you should hold in the portfolio for a longer term. There are behavioral aspects that come when these mistakes come in. There are 2-3 reasons why it happens. So let's say the first reason could be cognitive dissonance, or where Nivesh bought a company or a security for an X reason. And that reason somehow over a period of time ceases to exist, why we should be invested there. But Vinivesh creates a new reason, a new rationale to keep holding that, even when the buy discipline has not qualified that. So sometimes when people are making a certain loss or so, people want to hold on to those stocks, even if those reasons that they bought cease to exist. So don't remain relevant anymore. So those need to be exited. If Vinivesh doesn't exit that, that's a problem. So cognitive dissonance is one. Related to that is loss aversion. See, it's always easier to take profits than take losses. So even when we realize that we have made a mistake in something, we try to hold on to it, wait for a break-even number or something, and then we want to get out of it. Sometimes that's how weeds come into your garden. So loss aversion is another part which is a problem. The third problem could be trading too much. When people are watching these developments very closely, they also are affected by noise. Remember when we said buy and hold has become buy and watch minus trade. Because when you're watching something very closely, you're tempted to trade, that I can take the benefit of a certain move in the market in the short term. Typically, that's a mistake. Trading too much leads to lesser gains than what people think. And that's why this is one of the crimes that, again, Vinivesh should not commit. So these three are the most important ones.
Yeah, I mean, like, this is great because what I understand is if Nivesh and Vinivesh work with each other in tandem and maintain a kind of discipline, then you have the mantra that you need for investment success, right?
Absolutely, absolutely right.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.